1,600, 1,650 crore target which we had given for the renewable energy for the Mitra asset, I think, and we are absolutely on course of that.
20% the guided to growth of this financial year. I have the confidence on that we'll be reach on this.
19,500, not only is it sustaining, but the bulls are powering ahead.
The headline is that they have managed to grow their NII as well as their profit over 20% on a year-on-year basis for the merged entity.
For the markets, 88 points higher on the Nifty. It's virtually at the day's high as we speak.
Well, that was the day so far. You're with us here on the last hour of trade here this Monday. We're coming to you live from the CNBC-TV18 Motorola studios. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi. Good afternoon.
Hi, good afternoon. Good to see you.
Well,
I know you've
good to be
been,
back.
You've been back the whole day. But since it's the first time we're sitting
good
next
to be
to
noticed, Reema. I think that's what I should say. Nigel?
I love it.
All right, well, things are good, right? I mean, overall good, because the market is continuing from where it left off on Friday. So on Friday, we saw, by the way, last week between Monday and Thursday, it was nothing. I mean, the market was sideways in both the Nifty and the Bank Nifty. Friday was significant pullbacks, especially on the Nifty Bank, and we highlighted this in the morning, and we've built on those gains this morning. So 0.5%, but I think a good 0.5%. Nifty Bank, I think, is the more prominent index to watch because that has been in a more pronounced kind of straightforward corrective kind of pattern. It got to within striking distance, I mean, within 100 points of the 20-day moving average on Friday and then bounced back. Didn't quite get there, but pretty much on a 45,000 100-point gap is really nothing. So these are the levels, by the way, on the upside. I put this out in the morning as well. For the Nifty Bank, it's the earlier high, 45,655. For the Nifty, it's 19,740, which you need to kind of watch out for. Just take a quick look at, the advanced decline ratio comes in very good. 2.5:1 on the overall NSE basis. And it's not mid caps, it's small caps, micro caps. Small cap index, by the way, is up almost a full 1% or so. And that is making all the difference between the gainers and losers at this point in time. Lots of results, of course, also coming through, HDFC, etc. We will discuss in a bit from now. But it's a good-looking screen. Overall, no complaints. Reema.
Hi, and the big surge in the markets in the second half is courtesy the Nifty Bank. Pull up that intraday chart of the Nifty Bank, and at about 12:45, we saw the Nifty Bank take off, and it added on close to about 300, 400 points from the levels that it was. There you have it. 12:45 is when that rally started, when HDFC Bank reported numbers, and that stock is powering through. HDFC Bank currently is up close to about 1.7%. IT, on the other hand, at least frontline IT names are giving up some gains. That intraday chart of TCS and Infosys, and both those stocks have slipped about 2% from the day's high. Thursday was strong, Friday was strong. This morning, till about 12:31, IT stocks were looking quite smart. But since then, we have seen a slip in both these stocks. There you have it. The correction, the fall from the top in IT. So some profit booking is now setting in.
I think the key reason that the markets are high today is because of big boy Reliance Industries. The Nifty in this month itself is up to 2.5% approximately. Reliance Industries is up close to 10%. And that's clearly the one that's got its mojo. Everything is working for it, and it's the large weight on the index. So if you just pull up a screen, that's telling you a proper picture out there. Reliance Industries, well, that's constituting to bulk of Nifty's gains today. And if you pull up, I think, a month-to-date chart, the similar graph, if you pull up a month-to-date, it'll tell you the story out there, because Reliance Industries has been leading the way. It's up close to around 10% or thereabouts, 9% last 1 month or so. Nifty is up close to 4.5% approximately. So clearly, that's been the big outperformer. On the option side, today the put riders are feeling very, very confident. Are they getting overconfident? Time will tell. 19,600 put. It's the most active strike today. It's added open interest big time. Aggressive writing is what we're seeing out there. So clearly, the bulls believe that lower levels are going to get defended. In a single trading session, when you add close to around a crore shares on, it's telling you that the bulls are feeling very, very confident. The PCR, that's a bit of caution out here. When it's gone to around 1.6, you've seen the markets, they stall. So as of now, the put call ratio at around 1.5 at the higher end of the range. So let's see how this goes. But clearly, the data points are indicating the momentum is with the bulls, and it's just moving one way, northward.
Oh, absolutely. So the march higher continues in that sense. Well, how should you position yourself given what we have on our hands right now? Mitesh is with us with exactly that trading ideas for the next hour. Mitesh, good afternoon. First, take stock for us in terms of what you're seeing out there on the screen and what would you trade?
So the screen is pretty good, Prashant. We talked about targets of 19,650, 19,700. I think we have practically hit 19,675 and trading just around that. Waiting for the bank Nifty to start getting past 45, 120, 150. The high today is 45, 142. So I think once we see the bank Nifty add on to the upside, then I think we can look at a Nifty target of 19,900 to about 19,950. Just a caution, I think, in my experience, I think whenever you hit an important round number, I think just before that, there could be some profit booking. So around 19,900 plus or around those levels, we would want to take some profits and trail the stop losses. But for the time being, keep an eye on the bank Nifty. Getting past 45, 150 will mean a test of 45, 450, 500 at least, and maybe even higher levels could be tested. So a good setup. It's been consolidating for the last many days. It could actually see a 2-3 days kind of a burst of momentum on the upside. And that could add to the Nifty and propel the Nifty to the levels of around 19,990 is what I'm now looking at. But on the stock side, I have Kotak Bank on the recommended list. I think, again, coming from the fact that financials could add, Kotak Bank is something which has given a strong intraday signal. So recommending a buy here with a stop at about 1870 for targets of 1940, 1945. And on the other side, the second call which I have is is a buy on PI Industries, which I would recommend buying with a stop just around levels of 36.45 for targets of around 37.20.
Okay, those are some calls. Let's talk about Sterling and Wilson Renewable. It's up in double digits today. Came out with numbers last week, but the conference call was scheduled on Friday post-market hours. Vivek is joining in with what the management had to say. Vivek.
Well, absolutely right. So after the call on Friday where the management sounded quite buoyant in terms of ordering activity, today the stock has perked up quite admirably. Now, what's actually happened is that in this particular quarter, the company managed to post positive gross margins of 11.3% after almost 9 quarters of losses. And along with that, the current unexecuted order book is quite strong at over 4,900 crore. 94% of that is in the domestic EPC business. Company has also mentioned that as far as the ordering pipeline is concerned, they have another almost 5,000 crore of domestic order inflow that is likely, and this is separate from the large Nigerian order inflow that is expected. Now, the Nigerian order inflow, the management has stated that it should materialize in the next coming quarter. Now, along with that, they've also said that the high operational leverage along with the falling fixed costs should drive the EBITDA turnaround by Q3 of FY24. After that, you have Nuvama who's written a note on Sterling. What they're saying is that they are forecasting an accelerated V-shaped recovery as far as the earnings are concerned. Along with that, what they're saying is that the higher operational leverage shall enable EBITDA turnaround from the third quarter. And what they're saying is that the company is also in the process of cutting down the fixed costs from almost 400 crores per annum to close to 250 crores per annum, thereby aiding the bottom line turnaround much faster.
Okay, Vivek, thanks a lot for that. Well, Deepan Mehta, Director of Elixir Equities, joins us to help us out with some analysis on these stocks. Hi, Deepan. Good afternoon. What do you make of Sterling and Wilson? I mean, it was underperforming, but it seems what they're saying on the con call that they're getting their act together, profitability will improve, order inflow as well as good. They're sitting on a healthy order book, and also they're talking about some deleveraging later this year. Your view on the stock?
Yeah, I think it's a great turnaround story, Nigel, no doubt about that. I think after the new owners have taken over, certainly we have seen improvement in the performance. And going forward as well, I think there's good earnings visibility as well. But a lot of the positive seems to have been priced into the stock at this level. And on the whole, I'm still perturbed about the track record of the company, that how can a business which is in such a kind of a sunrise industry can do so badly. And this is not true just of Sterling and Wilson. Look at the way Suzlon also has performed in the past. I think these companies have defaulted and have gone into big trouble despite being in sunrise industries like wind power and solar power. So that's a bit of a mystery to me. And keeping that in mind, I think there are better plays in the capital goods sector. I think specialist companies, engineering companies, which have better perhaps a business model and maybe even a technological edge. Because even the return ratios for Sterling and Wilson are not that impressive. And given the run-up in stock price, I would want to take a plunge at these levels.
Okay, by the way, just a quick disclosure. Sterling and Wilson, of course, is owned by Reliance Industries, the promoter of this news channel that you're watching as well. You know, I just want to quickly highlight what else is happening. I don't know if you can go across on Z, which has been the big buzzer for the last 2 days now. I mean, Friday the stock was up about 9% or so, and I think today, last I checked, it was up 6, it's up 8 now. So it's the biggest, huge volume-led gainer across the board in terms of markets. Yash is here with just the lay of the land, nothing else in terms of what may happen or what the street is excited about, but just factually, where do things lie with Z? Yash, take it away.
Well, clearly, Prashant, for Z Entertainment, the show goes on. A 15% move in the stock on Friday and today put together. And that's largely on 2 important factors. The first one is on anticipation of a favorable order from the National Company Law Tribunal when it comes to the merger between Z Entertainment and Sony. And the second one is with respect to end of uncertainty when it comes to the Securities Appellate Tribunal not granting a stay to the promoters of the company, Puneet Goenka and Subhash Chandra. Let's speak about the immediate trigger that would be the NCLT order. The Z Entertainment Council has laid the ground, put in their efforts in terms of the arguments to get a favorable order from NCLT. There are 3 important points which they've put out. First one is that the parties which are objecting to this merger between Z Entertainment and Sony are not even creditors to Z Entertainment. That is the first argument, and Z has sort of substantiated that argument by saying that all the creditors of Z Entertainment, all the dues to them have been settled. These are creditors like IndusInd Bank as well as IDBI Bank. The next important point is that a merger between Sony and Z Entertainment should happen despite Puneet Goenka being the MD or not being the MD as far as the merged entity is concerned. Because there is some shadow from the SAT order on Puneet Goenka being the MD and CEO, they made it clear that irrespective of that situation, the merger should go through. Now, of course, on July 11th is when NCLT reserved its order in this particular merger case. It generally takes about 2.5 weeks, and the market would very keenly watch on that particular anticipated order from NCLT.
All right, Yash, thank you very much for this. Well, there have been quite a few slips between the cup and the lip, as they say, on this one, on Z. But Deepan, what would you reckon? Is it coming to some sort of a finality or not really? And would you want to take a bet on this one?
See, I think eventually they'll get around to the merger. It seems to be so. I think one by one, all the roadblocks have been removed. But what after the merger as well, I think, end of the day, the entire entertainment has shifted to OTT platforms. And clearly, I think Sony Live and Z5 are not the leading players over there. The maximum market shares with Netflix as well as Hotstar. And then Prime also is quite a strong competitor. And on the whole, I think revenues, subscription income has been remaining flattish for the entire industry. So it's a bit of a value play. I agree to that. And certainly, I think once the merger takes place, some uncertainties out of the way, and you could have a trading rally. But I'm not that optimistic on the medium to long-term prospects of Z unless they take a cat out of the bag and are suddenly able to improve their OTT content and become a market leader over there. But yes, it is undervalued. It is trying to. It has been depressed for a long time, and perhaps playing catch up at this point of time. So, given the kind of factors in play, you could expect the stock to move up by 5-10% more or so. But I'm not sure this is good for long-term investors.
Okay, do stay on. Deepan, need to get into a break. On the other side, we'll continue our conversation with Deepan. We'll also invite Rajiv Thakkar of PPFAS Mutual Fund on the other side. 19,650 plus 0.5% on the Nifty and the Sensex. The banks are outperforming. The Nifty Bank has a gain of nearly 400 points. There are two big boys contributing on the way up. One is Reliance and the other one is HDFC Bank. Both these stocks are up close to about 2%. In fact, let's talk about HDFC Bank. It's reported a steady set of Q1 numbers. The profit after tax has increased by 30% on a year-on-year basis, the best levels that we've seen in the last 14 quarters. Abhishek is here with the fine print on the numbers. Abhishek.
While steadiness continues for HDFC Bank in terms of its overall performance, the net interest income growth is about 21.1% YOY and about 1% sequentially, a bit below our poll on account of the increasing cost of funds. However, net interest margin on average asset basis remains steady at 4.1% when compared to 4.1% in the previous quarter. The fee income is a bit weak given the fact that loan growth is less than 1%. The fee income has actually declined by more than 5% on a sequential basis. So treasury income has been strong this time around. It's at about 552 crore when compared to losses in the same quarter last year and even in the previous quarter. So core operating profit is a bit soft this time around, growing at just 9.2% YOY and a decline of 2.35% sequentially. However, PAT growth is at 30% YOY. This growth rate of 30% is perhaps the best in last 14 quarters and it's down just 0.8% sequentially. The RWA to advances have inched up a bit to 103.4% when compared to 99.1% in the previous quarter, which is perhaps one of the highest in last 15 quarters. CASA per branch, on the other hand, that's also one of the lowest that you are seeing in last 10 quarters. But across industry, CASA is a bit of daunting task in Q1. So SDB Financial has reported a good quarter as well. AUM growth is strong over there, 19% YOY and about 5% sequentially. Asset quality, one of the best that you are seeing in last 3 to 4 years. Gross NPA ratio is at 2.48% versus 2.73% in the previous quarter. Even the profit growth over there is strong at 28.5% YOY and about close to 4% sequentially. In terms of asset quality, gross NPA of HDFC Bank is at 1.17% when compared to 1.12% in the previous quarter. Seasonally, we do see agriculture NPA coming in Q1. Calculation shows that provision coverage ratio has remained steady at around 75%. So in terms of our poll, the NI is slightly below our poll. However, PAT is ahead of our poll. Back to you.
Okay, thank you very much for that. There is a rub-off impact on other banks now. Pull up State Bank of India. That's up 2.25%. You've got an Axis Bank, which is now back in the green. ICICI Bank too was trading in the red for a greater part of the trading session, and now it's managed to get back in the green. So I guess it's fueled expectations of good set of numbers across the board. Dipan, this is going to be an important week in terms of banking numbers. We've got IndusInd Bank tomorrow, and then on Saturday, ICICI Bank and Kotak Mahindra Bank will be reporting numbers. Just based on the positioning, everyone's expecting, good set of numbers from the banking stocks. Do you think the banks will be able to beat those expectations, or are we looking at just a meet and yet the stocks will be rewarded?
I think so far only Bandhan Bank has disappointed, and that's really surprising. One would have thought with microfinance doing as well, they should do much better, but they haven't. And HDFC's bank are really pleasantly surprised because the pre-quarter review was not that encouraging. My sense is that looking at the way the early numbers have come through, banks will surprise on the positive side and may beat analysts' expectations. I think the problem is everything is going right for the banks. The only problem is the over-ownership issue. I think banks are a large portion of everybody's portfolio, and therefore further investing in them may be a bit of a constraint. But by and large, I think they are following through. Across the board, we are seeing higher net profits, lower provisioning, gross and net NPA levels are well under control. So I haven't seen the banking sector in such good health in a long, long time. I think even over decades that I've been tracking the sector. So yes, I think banks will remain as the market leader. And as the results come through, you will have a similar reaction to what you saw in HDFC Bank today.
Okay, Dipan, what about Route Mobile? The stock has taken a big U-turn. First, the news for the benefit of our viewers, Route Mobile promoters will be exiting the company. They have a 57.5% stake in Route Mobile. They will be selling out at a price of 1,626, and the current market price is much lower than that. It will trigger an open offer, so the new acquiring company, that's the Proximus Group, a Belgium-based company, will do a mandatory 26% open offer. Now, while the promoters are not fully exiting, they're still in a way cashing out because they will get about 5,700 crore rupees by selling that 57% stake in this company of Route Mobile. Out of that, they will be investing half of the money to acquire a 14.5% stake in another Proximus Group entity into which Route Mobile will be folded. So the street is a bit disappointed that, that promoters indirectly are at least cashing out half of their investment in Route Mobile, not investing, the entire amount that they're getting. They're going to be getting 5,700 crore from the sale of Route Mobile shares, and they will be putting in only about 2,500 crore rupees, plus or minus. So the street is a bit disappointed with that, Dipan. And the stock has crashed now. Does this tell you that, 1,626, which is the price at which the promoters are, getting out, partly, that's the cap on the stock?
So I don't think so, and I have not studied the operations of the acquiring entity, the Proximus. What their size is and what their plans are for the Indian market. And I would thought intuitively that this is a good development. And although the promoters are investing 50% back, you need to keep in mind that there's a tax element over here. So the promoters end up paying long-term capital gains tax on whatever they have sold, and if their cost is negligible, then you can expect a large portion of the sale proceeds to go, at least 10% of that, to go towards taxation. So effectively, considering that the actual amount which is receivable by them and what they're investing is not as low as it appears to be so. Secondly, I think that any consolidation within the industry certainly helps. And Root was looking more and more at the overseas markets, the emerging markets. They have a very strong UK business as well. So I'm really keen to know where the synergies are there between Root and its new owner. And on the contrary, I would have thought that the fact that the new owners are investing 14.5% in Proximus, that's positive. And the current management team continues to stay on board, that also is positive. But there's something which perhaps we are not catching over here, which is why the stock price is corrected. But certainly, I think further correction is not likely, given that there'll be an open offer. So you have an exit opportunity at 1626, which any investor can take. So automatically arbitrage has opened up.
Okay, got that, Dipan. Thank you very much for your time. Great speaking with you. Appreciate you joining in with that perspective on CNBC-TV18 as always. Well, 19,677 on the Nifty. We're up 113 points. Rajiv Thakur is Chief Investment Officer and Director at Parag Parikh Financial Services Mutual Fund. Rajiv, great to have you with us here for this conversation on CNBC-TV18. And I believe the flagship FlexiCap fund has completed 10 years in May. So congratulations to you, to your team, to your investors as well. And I think you guys have done a fantastic job, widely acknowledged now. I was just looking at the latest portfolio where 18% of the fund is in overseas securities. And of course, it's large cap, the FANG stocks, right? I was just curious to understand this year, with the huge rally that those FANG stocks have had because of AI-related themes, what has been the contribution to the overall returns from this 18% exposure in these names, Rajiv?
Thank you so much, Prashant, for your kind wishes and the good words. When we look at the performance of the international stocks, they obviously have rebounded very, very sharply in the last 6 odd months. But we have to look at it in context, where these stocks were the stocks which fell very, very sharply from the highs that we saw a year and a half back. So if we look at the Indian markets, we are at all-time highs in terms of our indices, whereas some of these names are even now lower than the highs that they saw earlier. So essentially, it's been just mean reversion in that sense. If we look at it from a one-year perspective, I think the Indian markets have done better than the overseas stocks that we own.
Hi, Rajiv. Good afternoon. Nigel on this side. Rajiv, HDFC, that's one of your big holdings in there, right? And the last, pull up the last 3 months or 3 years or so, in comparison to its peers, the stock performance has been a little bit of an underperformer. Look at a longer time horizon, it's one of the big outperformers. It's done very, very well. Do you think from here on now that merger is done, can HDFC Bank lead the way? And I ask this not just for those who are interested in HDFC, but because it's a large part of the index, both indices, that's Nifty as well as the Nifty Bank. Can it be an outperformer?
Sure. So only time will tell whether it outperforms, and we will not get too much into individual stock discussions. But broadly, just to discuss the current event and things around that. Typically, whenever we see any such large transaction whereby a huge M&A is done, initially there are these upfronted expenses that come about. In a normal merger, there would be the legal and transaction costs and stamp duties and things like that. There would be IT integration expenses that come about, HR alignment across two different organizations. In the banking and financial sector, apart from these normal merger-related activities and expenses, there would be things like CRR implications and SLR implications, priority sector lending implications, whereas the benefits come somewhere down the road. Also, there would be this big volatility around this, some of it which has already played out, where index weightages are things people speculate about because of the merger. Now only one company is in the index, which leads to index weightage change. Also, active mutual funds will need to sell some stock. So there are various things which will play out in the near term. But longer term, I think logically it makes sense to free up the regulatory capital to have both the mortgage piece and the banking piece in one entity. So it's among our larger holdings, and I am positive for the bank as well as the overall private sector banking space in the coming period. I think next 3 to 6 months will be a period of volatility and a bit of up and down.
Rajiv, just on that point about the index weightage, etc. Now, for instance, suppose HDFC Bank has close to about a 15% weightage on the Nifty. No mutual fund can hold more than 10% of its portfolio in one stock, which means it's capped at 10%. Now, is there a possibility that mutual funds will tank up their holding, increase their holding in other banking names in order to make sure that at least the overall banking exposure, which could be 35-40% as compared to the Nifty, stays intact? So you make up that balance 5% holding between what HDFC Bank's holding is in the Nifty, weightage is in the Nifty versus what you're allowed by buying other banking names. Is that a possibility, and could it lead to buying in other names?
So all fund houses have different strategies. Some people very closely track the benchmark weightages and try to replicate that in some fashion, and for a big deviation they have to justify why they are underweight or overweight certain sectors. Those people may follow the strategy that you are suggesting, and I'm sure there are some fund houses which follow that approach. Speaking for ourselves, we are agnostic about the sector weightages in the index. We go stock by stock and try to figure out whether there is merit in owning something or not. So it may not apply for people who follow our approach of being benchmark agnostic, but I take your point. There will be a section of the active managers who will try to make up the underweight in HDFC Bank by buying into some other banks.
Rajiv, you all have been quite bullish on some of these PSU names. NMDC, Coal India, Power Grid. The last disclosure that you all have made as well, most of the money has been allocated to few of these names. You believe that there's still a good long runaway? Some of these stocks, because of ESG concerns, they are derated, they were not looked at. You all got in early in a couple of these names as well. What's the view from here on particularly these three?
So the entire PSU space has been very, very tricky for investors. And on a whole, if we look at the long run, the basket has underperformed for investors over, let's say, 5 years, 10 years kind of perspective. There have been certain specific challenges in the space. One challenge, of course, has been many a times the social objective has taken precedence over minority shareholder returns. So sometimes decisions in the companies are taken from the social context rather than a profit perspective. So that has been one challenge prominently in the oil marketing companies, for example, in the last cycle when oil prices were elevated globally. and they were not raising prices domestically. The other big overhang has been the continuous selling in these stocks from the government side as part of its disinvestment program. And the third problem has been largely the capital efficiency and capital allocation policies and money being stuck in non-core assets. So I think broadly there is understanding in the government circles that continuous divestment by small stake sales does not make too much sense. So there has been talk about some key privatizations. So this talk again has been going on for a long period of time, but we have seen most vividly a difficult decision being taken in the form of, let's say, a Air India privatization. We have seen certain demergers happening across a host of PSU companies where the non-core assets are being demerged into separate companies with a view to make strategic sales. So from these perspectives, it's somewhat of a changed environment where there is focus on capital allocation and monetization of non-core assets. ESG concerns have been there in certain sectors, especially around the fossil fuel energy and things like that. But those, I think people are coming around to the view that longer term, you have to transition away from them, and you cannot just do a switch overnight and just write away these sectors.
Got it. Another, Rajiv, I don't know, I'll just read out the news which is coming in right now. And this is important. This is with regards to Z. So Z Entertainment is telling us that, in a board meeting which was held on the 14th of June, it's been decided to essentially constitute an interim committee made up of senior executives, which will now run operations. And this has been necessitated by the fact that by the recent SEBI order, which barred Puneet Goenka and Subhash Chandra from holding board positions. And of course, the appeal at SAT, which did not hold water, SAT refused to give a stay to the SEBI order, which had come through, what this, in that sense, also in a way implies that, that going forward, maybe the role of both Mr. Puneet Goenka and Subhash Chandra perhaps will be much more diluted than before. In what capacity, etc., they may be involved, we don't know. But at least in terms of running operations of the company, I think this is a pretty big change which is coming through. If I may quickly read this out, I've kind of given you the gist of what the what the board meet takeaway is. But it goes on to say, the statement from the company spokesperson goes on to say, the interim committee will be under the supervision of the board, will seek guidance on all matters pertaining to the company. The board continues to have immense faith in the value-building leadership skills showcased by Mr. Puneet Goenka and will monitor the progress of the matter. The board also remains confident that the company will deliver robust returns for all shareholders. So this is the statement which is coming in. Rajiv, I don't know if you have any thoughts at all on something like a Z, with that merger with Sony, of course, was hanging in balance. This may be, the counsel for Z has been arguing in court that with or without the earlier management, the merger should go ahead. And the market seems to be betting on that fact. What would you say about this one?
So we don't own the company in question. We don't have a position in Z Entertainment. And as such, I don't have any strong opinion. Here, I think largely it's an event-driven thing. The merger happens, does not happen kind of thing. It's more or less a binary. So I think the price movements will be largely news flow driven, and one cannot form any opinion in terms of business as usual kind of scenario. It's either the merger happens or does not happen kind of situation.
Okay, all right, got that. Rajiv, we'll leave it there. Thank you very much. Appreciate your time here on CNBC-TV18. Thanks very much. Well, we'll take a quick commercial break here. We'll come back and, as always, get you a check on what's happening in dealing rooms. Nimesh will get us that perspective. And, of course, buy today, sell tomorrow trades coming in with our technical experts as well. Stay with us.
Welcome back. Well, the banks are in focus now. And the reason that the Nifty, forget about 19,500 that we were talking about, on Friday. We're at 19,700 and we've just kissed that mark for the first time. The Nifty Bank is powering ahead. It's up more than 500 points. And you have the Nifty now that's up at around 19,700. Just building onto those gains, looking very, very good. Nimesh joins us to tell us what he's picking up in terms of D-Street charter. Well, Nimesh, we had a chat on Friday, right? Fundamentals are taking a backseat. Flows, they are in focus, and flows are going to drive this market higher. What are you picking up?
That's right, Nigel. And that's exactly playing out as well. And again, if you see, I've been saying this for a while now, that as we move higher, the breadth is going to get narrower and narrower. If you look at today's trade, the two big heavyweights are actually helping the market hit record highs. So Reliance is helping the bulls, and so is the case with HDFC Bank as well. Post numbers, you've seen a bit of an uptick in that stock as well. Remember, the con call is today evening, so you'll see a lot of reports as well from analysts tomorrow. So that's something to watch out. From a broader market point of view, that space is relatively underperformed, and one of the reasons could be that there is a small selling flow, is what I understand, especially in the broader market. So that's our overall feedback. The sector that stands out again in today's trade is technology. That's after a big move whole of last week, still there is a bit of buying interest by the larger institutions. And remember, this is one sector which is relatively under-owned yet by the larger institutions. So there is a bit of chase there as well. And I guess the other thing which is playing out is not only in sectors but across the market as well. The underperforming sectors and stocks have now seeing a bit of leg up. And today the case for metals as well. So a lot of metal stocks are buzzing as well. But largely today's move is largely led by some large cap names and some signs of underperformance in the broader markets on the back of small selling pressure from some FIs.
In terms of specific stocks, Nimesh, what are you picking up?
A lot of stocks, Prashant, and all seems to be largely from that mid-cap basket. The first stock is Taneja Aerospace. Out of nowhere, that stock is buzzing in trade, huge volumes, and the stock is up 17-18%, and strong buying as well is what I understand from some larger HNI. So that's the reason why that stock is buzzing in trade. The second stock is Indus Tower. After a long sort of consolidation, seems to seeing a bit of breakout as well, and I understand a selling pressure from a leading FI also seems to be largely over. So that explains a big move in Indus Tower. Also for Indus Tower, remember, the big trigger would be as and when Vodafone India announces some fundraising plans, and that could be a big trigger to watch. So that's the second one. The third stock is Gland Pharma. There were some reports as well, and again, some bit of buying interest is back. In fact, I understand there is a block bid where some large FIs were interested in buying in blocks as well. So that explains a big move in Gland Pharma today. And the last one is Indiabulls Real Estate. Again, within the mid-cap basket, that's one stock. Big move and on big volumes as well. Remember, in this case, the NCLT had rejected the proposed merger, so there were a lot of permutations and combinations going on. Now, I believe the street is anticipating some move from Embassy with regards to Indiabulls Real Estate, and hence a big move in that stock as well today.
Okay, thank you very much for that. I'm watching for LTI Mindtree as well because it reports numbers post-market hours along with Tata Elxsi, and LTI Mindtree has slipped quite a bit from the day's high. It's just up close to about 1%, but from the day's high, it's lost about 3%. So keep your eye on this stock. Mitesh is back with us for a few BTST calls. Mitesh?
The bank Nifty has managed to get past 45,150. So we had Kotak Bank earlier. I think ICICI Bank now can be taken as a BTST kind of call. Keep a stop at about 960 and a target of 985 can be looked at. The other one is ACC, which I would recommend taking BTST with a stop below levels of 1800 for targets of 1835.
Okay, thank you very much for that. L&T Technology. So today you have LTI Mindtree, which will report numbers, but tomorrow LTTS, that's L&T Technology Services, will be reporting numbers, and these numbers will be watched very closely because if you remember in HCL Tech's numbers, the ER&D business was muted with a revenue decline of 5%. So is this something that we're going to be watching out for from L&T Technology as well? Is ER&D hurting? In terms of the numbers, the top line growth is going to look good at 12.5% on a quarter-on-quarter basis, but this will include the SW acquisition that the company did from the parent company. If you strip that out, on an organic basis, the revenue growth is seen up close to about 2 to 3%. Margins are likely to remain under pressure, so margins could come down by 140-150 basis points, again, due to the SWC acquisition. This is a company that they acquired was effective. The merger was effective 1st of April, so this will be a full quarter impact. So on the top line, it will boost their revenues by 10-odd%, but it will result in margin pressure. Do they maintain their FY24 guidance, which currently stands at 20% on the top line, which is, if you break that up, it's 10% organic and 10% due to the acquisition. And overall focus will be on the discretionary nature of the ER&D spending. Is this picking up? And even on the high-tech and medical devices, where the management has sounded a bit cautious in the last quarter. So that's about L&T Technology Services reports numbers tomorrow. We also have Polycab, and this stock has been on a tear over the last 1 year. Surabhi, what's the street expecting from numbers?
As far as the numbers are concerned, the street are expecting a strong revenue growth, especially in the wires and the cable segment. The FMEG part, which is the electrical goods part, could be a little muted, and that is due to higher channel inventory for the fan segment. So revenues are expected to be higher by 14% on a year-on-year basis, EBITDA up 26%. Margin expansion as well, over 100 basis points of margin expansion at 12.6% and PAT up 21%. We'll also be watching out if the company gets any benefit from the dealer restocking that has happened owing to higher copper prices, management commentary on the export revenue front going forward, and the volume growth outlook also.
Okay, thanks a lot for that, Surabhi. Well, let's discuss a couple of other names then. And we have Anand Tandon who joins us to help us out with just that. Hi, Anand. Good afternoon. Thanks so much for joining in. Anand, I want to know whether you track some of these names. Just going to throw a few names to you. We have GTPL Hathway. We had the management earlier, and they're sounding very, very optimistic on their business prospects. Precision Camshaft, that's suddenly gone up close to around 20%. I think the second day running that stock is up. And the smart meter plays as well. Do you track any of these names?
I'm no longer a small cap investor, Nigel, so I don't. I'll have to pass on these.
All right. Okay. Let's focus then on the PSU banking names. The Bank Nifty has moved to the high point of the day, and SBI is leading the way as we speak. Now, some of these banks have got re-rated big time because they had valuation comfort. But how do you play these themes from here on? And what's your preference between PSU as well as the private banks? Do you think the PSU banks still have more legs from here on?
Well, they may have a few more, they could actually continue to outperform for the next couple of quarters at least. Valuation-wise, there is still quite a lot of gap. But if you are looking at it from a long-term perspective, my own preference is to stay with the larger private sector banks and the larger public sector banks as well, which means SBI, HDFC, Axis, ICICI kind of banks. HDFC has been a favorite of late because it has underperformed, and much of it is technical. I think you've already seen the numbers coming through, so there is no particular reason why one should not be focusing very sharply on this rather than trying to figure out, the next HDFC.
What about Bandhan Bank? What have you made of the numbers? It looks very weak. And is there a rub-off impact of the stress that we're seeing in the MFI asset quality on any other, any other stock in the listed universe? Anything that you would be watchful, on based on what we've seen from Bandhan?
Skeptical about MFI in general, and now that they have become banks, they obviously, the margin is deceptive. One has to keep in mind that every 3 years, they have a situation where they don't recover anything more than 50-60% of their book. And the reality is that if you are not recovering 98% of your book, you're not making money. So I think it is, I find it really strange that, you look at 1 year ROE and figure out that, okay, this is a great business to be in. And then the years where you are taking the loss become one-off. So, for people with very high risk appetite, certainly one can look at MFI. I would stay strongly away from it.
Look at something like out of the, I think we're increasingly using the word out of the blue. Taneja Aerospace, Nimesh highlighted something of that sort. I remember that one, even from the 2006-2007 bull market used to come up occasionally. But back then it was a land story in Bangalore. Big one, 19% move on Taneja Aerospace. Look at Vaibhav Global, which is basically, they make imitation jewelry and they sell it in US, Europe, etc. I think via television is a medium, to advertise. A huge, underperformer over the last many quarters now, but coming up with about a 7-8% kind of a pop. So, as I said, we are using these terminologies more out of the blue, and but that's the kind of market we are in. As the breadth expands it almost seems to be, the motto seems to be leave no stock behind. It's just kind of spread all across and wide with the underperformers catching up and the gainers, of course, holding on strong as well. So many other names. We'll actually take a very quick commercial break here. We'll just come back, and Anand is with us. There is still 11 minutes to go for market closing. More market and stock discussion in a bit. Okay, welcome back. 160 points now on the index. We are at the day's highest point, and there has been another fresh move which has started from 3 p.m. 3 p.m. the Nifty was at 19,675, and we are at 19,720. So it's been good. The last 30 minutes, actually not 30 minutes, but more. Last 30 minutes has been pretty good for the Nifty. Let's just look at the same graph for the Nifty Bank as well, and a similar kind of picture emerges. I mean, here the move started actually at 2:30. We were in the Nifty Bank at 45,100. We're at 45,500. So 400 points in the last hour or so on the Nifty Bank coming in. So these are large, big surges coming through. It will be interesting to see once again the FII number by the end of the session, and if we get something quite large as what we saw on Friday. I can kind of, Anand, thanks for staying on. Any thoughts on Z? I don't know if you have a view there, a firm or a weak view, but do you have any thoughts on what's going on?
Well, I think the only trigger there is the merger, right? I mean, really, if that happens, it's good. If it doesn't, for whatever reason, then there is not much of a story there because there are others which are catching up. Basically, it's only a question of being able to gain market share at a substantial amount so that you can take up the fragmented advertising space and subscriber space that is available to you. So beyond that, I don't think there is much that I could add value on.
What have you made of the transactions that we are seeing in the CPaaS market? So today it's Route Mobile, where the promoters will be exiting this company but investing half of the proceeds into the merged entity with the larger group Proximus. But recently you had Tata Communication acquiring a CPaaS company, Kalera. Tanla acquired another India-based company to become bigger in size. Your thoughts on CPaaS market and how it's evolving, competition, and is there any play here?
Well, I think, the demand is obviously going to continue to remain very bullish. The question is you will need a lot of capital to be able to, offer that as a service. And consequently, you will need to have situations where larger companies will come in. So I'm not surprised to see somebody selling out. Now, the question with any of these things is being able to get the client base going through you. Broadly, I think it's a growth area. I don't specifically have a recommendation that one can look at, but companies like Tanla, etc., which have actually demonstrated at least some capability in terms of being able to deliver, at one level for one kind of product for a whole lot of companies, may have a little bit of an advantage given the fact that they have, that coming through as a cash flow, and therefore being able to reinvest that money and get more of their more share of the wallet, as it were, from their customers.
Well, Anand, final question then before we let you go. There's hopes of a stimulus coming in from China, and that's why these metal stocks are running up. But, do you think they're priced in all the good news, or do you think there is still some more scope?
So I think the way to play China is to buy one of the mutual funds which holds things like Ant and so on, rather than to worry about metals. Frankly, I don't think China is going to do anything in terms of metals. There is already one of their major sectors which is lagging is real estate. I don't see demand for steel coming because of anything that China does. China, if at all one has to invest in it, has to be from the point of view that it had become uninvestable, and perhaps the industry there has now settled with the government, or the government has settled with the industry and is now allowing them to function as businesses. So from that point of view, I think China tech looks the most interesting part of the business. Metals way down the the list in terms of anything which is attractive.
But I don't think you can invest in funds, right, with overseas. I don't think maybe there are some routes available, but that limit was full up, right? For mutual funds at least, for which are investing abroad. So till that point, I guess people will look at other ways to play this one. But point taken, Anand, and I think it's a well thought out one. Thank you very much for joining us. Great speaking with you, and appreciate your time here on CNBC TV18. 150 points on the Nifty, and as I said, last 30 minutes and the last hour, pivotal for both the Nifty and the Bank Nifty, respectively. So these are strong gains that we will end, and practically at the day's high, by the way, on those indices. Mid-cap index, not quite perky, but 0.25% higher on the Nifty mid-cap, and the small-cap index leaves 0.8% higher, pretty much where we were at 2:30 when we started this program. So the real action, actually, the real incremental push came through in the frontline Nifty and Bank Nifty. Rima.
So State Bank of India is your top Nifty gainer for the day, up 3%. Other banking names include HDFC Bank, post numbers, steady set of numbers. Kotak Mahindra Bank, IndusInd Bank, ICICI Bank, all rallying anywhere between 1 to 2%. So large cap banks providing the thrust on the way up. In the IT names, you had Wipro, which held on to most of the gains, at least gains of about 2.5%. But on the other hand, names like TCS slipped close to about 0.5%, and Infosys too ends in the red despite a strong start. Reliance Industries has been a big contributor and a strength on the way up. So Reliance Industries gained close to about 2%. On the losing side, ONGC is your top Nifty loser, and that's after Brent crude prices have seen a very sharp correction, and other notable decliners include Hero MotoCorp and Tata Motors.
Well, the mid-cap index underperformed today, and the number of stocks advancing in comparison to the number of stocks declining. Well, those crisscross lines got a little bit closer to each other. But let's only highlight stocks that were up either 10% or more. HPL Electric, 10% up. You had Piramal Pharma, that as well was up close to 10%. India Bulls Real Estate up more than 10% in today's trading session. Atul Auto as well was up close to 12%. Venky's was up close to 15%. Sterling and Wilson as well. They are promising better things in the times to come. So that one as well was up close to around 15%. And Jaiswal Nico, that was another one that was up close to around 17%. Don't talk about some of these names very often, but they are on the list. And Precision Camshaft as well. Second day closed out. You couldn't buy more by the time you wound up. Second day running, the stock up close to around 20% or thereabouts. And GTPL Hathway as well. They came on the channel earlier and they were talking about margins recovering big time. Well, that stock from being up close to 10%, it ended up close to 20%. That's sort of a market, guys.
And is that sort of a market where an Avenue Supermarts, a Bandhan Bank, even a Just Dial... You disappoint and your stocks are getting corrected. And even some names like Just Dial, where the numbers were good, but yet the stock ends down close to about 4.5%. But the stock which got punished today was Route Mobile, as it ends with a cut of close to about 8%. It's a wrap, guys, on Closing Bell. From the entire team, thank you very much for watching.